Hi, I'm Terry Gass. I'm the Executive Vice President at 21st Century Equipment, and I get the pleasure of working with our sales team and our customers all day, every day.
How does 0% financing impact the final price versus a cash-off incentive?
So anytime you see a 0% financing offer, most of the time that's from the manufacturer, and that is subsidized with cash that they put toward incentives. Most of the time there's a cash alternative that you can take instead of that 0% offering. Our direction to our salespeople is that they offer the customer both options, so the customer can decide which one's better for them. The thing I would encourage customers to always do is do the math yourself as well and say, okay, if I'm gonna pay this off early, I'm probably better off taking the cash discount. If I'm not gonna pay it off early, if I'm gonna run it to the term of that 0% program, I'm better off taking the 0% option because I'm gonna save that interest expense, or I could use my money elsewhere. There are cases where there is no cash in lieu, and so you truly are better off using somebody else's money to keep your money in your pocket and take advantage of the 0% program. But it really depends on the program. In most cases, there is a cash in lieu alternative to the 0% financing, but not always.
How does trade-in value work for equipment with high hours?
So the trade-in value of any piece of equipment, no matter what it is a fluid thing. It's not static, and it changes, I hate to say daily, but it changes regularly, and that's driven by the market. Where it starts and ends is what that piece of equipment is going to sell for. Once we bring it in, service it, get it ready for retail, and then sell it to the next customer. It really depends on what that next customer is willing to pay for it, and that's really what drives the trade-in value. That may be good today, it may be not so good a month from now, but it really is driven by the cycles that we're in. The older equipment is less volatile when it comes to the various cycles. There's always a high demand for higher hour, older equipment, and that's why you don't see much of it on our lots. Most of that stuff comes in and goes out just as quick, and we don't hold it in inventory because there is that demand for it. And that is a big driver in what the trade-in value is for that equipment.
What are the weekend warrior or long-term rental rates for CCE equipment?
So there's a lot of connotations around a weekend warrior. I'm a weekend warrior when it comes to being a farmer. There's times when I need to own equipment. I've got a loader tractor. A lot of people out there have a loader tractor. But there's times when you need an excavator, when you need a skid steer, when you need a wheel loader, when you need an attachment that comes with one of those, like a jackhammer or a land plane. We have rental programs anywhere from a day to a month in length. And so if you need to rent a skid steer for a weekend, if you need to rent a mini excavator to dig leach lines, or to put in a water hydrant, or to dig a goose blind, we have those rental rates for any customer out there. Within our rental rate is insurance, liability insurance, which a lot of companies require you to have. We make it easy and we do it internally, so it's not an extra step that you have to make, whether you rent for 1 day, 1 week, or a month.
What options does John Deere Financial offer producers to secure or lock in a competitive rate before their factory-ordered machine arrives?
So when you order a new piece of equipment, you've got an option to lock in a low interest rate program. And that's the only way to lock it in. If you're choosing to take the cash in lieu option, you cannot lock in an interest rate. The only way to lock in an interest rate when you order a piece of equipment is to opt in to the low rate program that's available. And so that decision needs to be made at the time you order it. One of the other tools we have at our disposal when it comes to you ordering a piece of equipment is we can at times offer you an interest waiver to help mitigate the high interest rate environment. The best thing I can encourage customers to do when they're trying to navigate the waters of a changing interest rate environment is to talk with their sales representative and talk about options that are available at that point in time. Because like with most programs, those interest rates change on a monthly basis with the lenders, not only with John Deere, but with AgDirect and any local bank. Those change from month to month.
What type of warranty coverage is offered on all equipment types?
So warranty is one of those things where one size doesn't fit all, but we've got options for most everything late model that you see on our lot. From new factory warranty from John Deere and the other manufacturers we represent, to extended warranty through John Deere, to third-party warranty options, not only for John Deere equipment, but for other manufacturers, going out several years and thousands of hours beyond the new warranty. We can do things with John Deere's PowerGuard warranty to where we extend the warranty beyond the factory warranty, both on a comprehensive level, but also on a powertrain level for a further period of time, and it protects the high dollar components of that machine like the engine, transmission, and drivetrain. We can also work with partners like Machinery Scope, not only with John Deere equipment, but with other manufacturers who would further out into the future in offering the same level of coverage that we can offer with John Deere. And that goes everywhere from the big equipment down to the gators and lawnmowers.
Is it better to lease or buy a combine every 3 years?
When it comes to the question of whether to lease or buy a combine every 3 years, one size doesn't fit all. There's different reasons why customers lease equipment. Sometimes it's balance sheet management, sometimes it's cash flow management, sometimes it's generational change or customer wanting to wind down their farming career in the next few years. There's a number of reasons why customers would lease. But leasing isn't for everybody. There are customers that take a lot of pride in ownership and absolutely will not lease regardless of what the benefits are. And that's okay. We want to embrace that. There's reasons that customers want to buy and own those combines because they're going to put more hours on than a lease will allow, or because they know they're going to hand that equipment off to their next generation, to their child. But there's a lot of reasons that a customer would buy rather than lease. And so I can't dictate to a customer whether it's better to lease or buy. It just depends on the exact situation of that customer when it comes to their plans for retirement, when it comes to their plans for growth, for going from farming as an individual to farming as a corporation or a partnership. There's a number of reasons why a customer would lease, but there are equally a number of reasons why a customer would buy versus lease.
How does our internal leasing differ from standard corporate John Deere Financial leases?
One of the benefits we've got at 21st Century Equipment is we have our own internal leasing company that complements John Deere Financial, which is our primary retail financing entity. The benefit to having that in-house is we can lease equipment that John Deere and other lenders won't lease because we own it and we control it. We control the interest rate. We control what the purchase option is at the end of those leases. For example, on a corn head or a rotary cutter or an auger or a grain cart or any of the ancillary non-primary equipment, we can lease stuff like that, where John Deere won't necessarily lease that stuff. We can set up unique payment arrangements for the customer, again, because we own it and we're in control. The difference between John Deere Financial and 21C Leasing is really the flexibility and the ability to lease things that you can't through John Deere Financial.
Can I buy used equipment online through High Plains Wholesale?
So 21st Century Equipment, first and foremost, is a retail business. But there are times when we have excess of certain models of equipment, certain sizes of equipment, that we do some dealer-to-dealer sales throughout North America and beyond North America. And that's why we established High Plains Wholesale. It's mainly for the dealer-to-dealer work. But there are times when customers see our videos out there on High Plains Wholesale and want to buy that piece of equipment. We can do that. There is no financing. There is no warranty. There is no trade-in allowed if you do that. That's because that is at a wholesale price. We cannot stand behind any potential failure on that equipment that we sell to an end-use customer like we would if you came and paid retail price for something off of our lot. That's truly intended to be a wholesale transaction. The benefit to buying some through High Plains Wholesale is if you just need a piece of equipment, you've got the cash to pay for it, and you don't have a trade-in to make, you're going to get the best deal you can possibly get. You're not going to find a better deal anywhere in North America buying something off any dealer's lot for that piece of equipment.
What are the current order fulfillment lead times for new tractors?
So one of the things as a dealer that we're at the mercy of is the manufacturer and their production scheduling. It's not a simple answer because it depends on the model. It depends on the transmission. It depends on what attachments you get with it, what engine you get in that piece of equipment. There are a lot of things that affect lead time when it comes to order fulfillment. We do our best to stock what we think is the most likely to sell based on the configurations that customers have historically bought from us. There are times that we're just not going to get it right, or there's a spec that a customer wants. The best thing you can do is come in and talk to your salesperson. They can put in a mock order and see what the availability looks like. With nothing more than a phone call, we can typically give you an idea. If you're asking about a lawnmower, if you're asking about a gator, if you're asking about a small tractor or even a large tractor or a combine or a sprayer, we can give you a pretty good idea. But if you want a precise date, we would have to really spec the machine out for you and give you an idea for what that looks like. But one size doesn't fit all. It really depends on what size of equipment you're getting and what the configuration you're wanting is.
How does a buyer decide between a 0% APR promotion versus taking a cash-in-lieu discount on large ag iron?
So there's a lot of times when a customer buying a brand new piece of ag equipment will have an option. Do I take this 8% bonus or do I take the 0% for 60 months? And that's primarily on hay equipment is where we see that. That's the question that I would turn back on the customer and say, how long are you going to run it? If you're going to run it for more than 5 years, take the 0% program. You're going to be financially better off, so you're not going to pay any interest. If you're not going to run it for the full 5 years, you're not going to get the full value out of the 0% program. So I would take the cash-in-lieu. But it really depends on the customer's individual situation. When it comes to bigger equipment, right now, John Deere doesn't have a lot of cash discounts on the big equipment. They do on combines, they do on sprayers, they do on planters. There is a cash-in-lieu option. But typically on tractors, they don't. My question back to the customer in every case will be the same. How long are you going to run it? Are you able to pay cash for it today? Or is that borrowed money elsewhere? Our obligation to you as a customer is to make sure you pay as little interest as possible. That's our obligation, to put you in the best possible position. We don't have a benefit whether you take the 0% program or whether you take the cash-in-lieu. There is no benefit to us. We want what's in your best interest, and that's for you to minimize the interest that you're paying during the life of that loan.